Well, good morning. This is a very special day. This is the day after Christmas in 2022. We have a very, very special interview today. We have Charles Nenner and Paul Lehr together. Now, you know Charles Nenner, who is head of Goldman Sachs prop trading. He was a consultant for the President of the United States, George Bush. He has been seen many, many times on Bloomberg and CNBC. And we're going to be talking with Paul Lehr, who is a biblical scholar. He's head of Paul the Poke. He's a editor and contributor to God in a Nutshell Productions with Trey Smith. So this is going to be a very different interview today. But we're going to talk about the cycles, and we're going to talk about how they relate to any biblical prophecy that we have. Charles, how are you? It's so good to have you. Welcome to our
great to be here.
It's going to be something really different today.
This is going to be very interesting.
So I'm going to let you guys talk more than me, because you guys are much more, you're better at it than I am. And let's bring Paul Lehr in too, so we can introduce Paul. Paul, how are you? So good to see you. Thank you for joining us today. I know it's an interesting day after Christmas, and we're all busy, but thank you for coming together. We're going to talk about, now you're a biblical scholar, so there is so much turmoil in the world. And of course, Charles's cycles has been pointing to a lot of major events. And some of these are correlating a lot with some of the things that you research, do they not?
Yeah, that's what I find very interesting, looking at the cycles work that Charles does and how that potentially relates to sabbatical sets or Shemitah years. And I'm just fascinated to ask a lot of questions and kind of learn and see if there's any sort of synthesis with all of this.
Well, there seems to be. So you do an awful lot of end times and tribulation work, do you not?
That's correct. And one of the hallmarks that it is to occur, according to Revelation 6, prior at the initial onset of the 7-year tribulation, is global hyperinflation. So I'm really fascinated in economic scenarios that lead up to global hyperinflation, food shortages, war breaking out, so civil cycles as well. And I'm familiar with Charles's work on those issues as well. And that's kind of what brought me to want to visit with Dr. Nenner.
Well, we can talk about the geopolitics on his cycles and his war cycle here today, and of course, from my point of view, economics generally leads into a lot of these war cycles as kind of like the precursor to it. It's one of those things that you can see. So, Charles, should we go to your first slide and we'll just talk about this, because this is the Fed funds rate, and this, of course, is inverse. There's an awful lot of talk that the Federal Reserve is going to pivot. They're going to reduce interest rates. They're going to bring us back down to 2 and 3% long-term rates. And there's nothing in this chart that shows that, is there?
No, there's nothing in the chart that shows. This shows that Fed funds should be high until, you can see it on the top left, until June 24.
So we're talking about another year and a half of rising interest rates. Can you look on your charts and put a number on that? Do you have an idea?
First of all, it doesn't mean it's over. It just means that there is going to be a cycle low. That means it's maybe then for a year or half a year, we get lower rates and then we get higher rates again. Because as you know, I expect rates to be higher for the next 30 years.
Wow. So you think they're not going to stop at this point? This is just the bottom, and then the cycle may continue past that. Oh, that doesn't bode well for our economy, does it?
No, and not for the world, as our scholar will tell us later.
Well, no, I would ask, as I understand a lot of your work, you look at these things independently of each other. So you wouldn't necessarily see this influencing a strong dollar per se, but you look at the dollar independently and you look at your Fed fund rate independently, correct?
But we happen to have a chart, I think we sent it also to Michael, where it shows that the cycles that predicted the top, we talked a lot about that, Michael, in the dollar are close to a low. So of course you can say if interest rates are higher than in Europe, then the dollar is going to be stronger than the euro, which usually is the anti-dollar these days. So you can make some sense out of it. And you can also make some sense that I think I'm not sure if I sent you the short-term commodity index that soon is picking up short-term. So then everybody starts saying, "Oh, inflation is back." It's only short-term. I think the recession is going to be too wild for the inflation to be much higher for the next half year.
Well, one thing we know for sure is that recessions kills inflation. That's one of the surefire things. So if they want to get inflation down, they just cause a terrible recession. I did have that chart of your dollar. It was down further in the deck. Every time I see the U.S. dollar start to get really strong, it just causes turmoil in the world. I mean,
Well, you know, I like I said, is we're going to be neutral, what you call neutral in the war Ukraine-Russia based on a cycle. But then next year, a little bit into 2003, the whole thing is going to pick up again. So then maybe who knows how bad it's going to be, which could be a reason that the dollar goes up again.
Does your war cycle say anything along that line?
Yeah. The second half of next year, it picks up again.
And a strong dollar means inflation around the world, does it not? I mean, almost all the commodities are expressed in U.S. dollars, so it might be less money here. But if it's $100 for a barrel of oil, it might be $130 in Canada. It might be $200 in Turkey, which a $200 a barrel of oil in Turkey would be hyperinflation.
Well, that could lead to recession, and if there's a recession worldwide, they have less money to buy American goods, so that will lead to recession over here. So you can make that interpretation.
Whatever this says, it means that we probably have some problems coming in. Paul, any comments on this?
Yeah, a couple of things. If we're just looking at the sequence of things, at the beginning of the onset of a tribulation, a 7-year tribulation period, war breaks out first, and it would be global in scale. A red horse, take peace from the earth. Men should slay one another. Great sword was given to him. And then we start talking about things such as famine, economic hardship, where it literally a day's wage to feed a family, like a denarius, when this would have been written around, right around 80, 90 AD. A denarius was a day's wage for a quart of wheat to make a loaf of bread. And that's the thing with this, as we enter the scenario of things we're seeing on a geopolitical scale, by no means am I saying this is it. But we have a setup from my standpoint, to me, and I'm in a minority opinion on this to some degree. I think a runaway dollar, and strength is a thing that would cause global chaos. Now, eventually, we can have a discussion about once other nations respond to a strong dollar, and we have another fiat currency per se, what that would do to the dollar. But if you look at the last statement, it says, "Do not harm the oil and wine." So a lot of people take that to be that the rich are not influenced initially at the outset of this 7-year period. And those of us in the West, globally speaking, are definitely the rich. And they would be the last to feel the pain. And just looking at some of the slides and things that you guys have talked about, and you look where inflation is the strongest, it's in the areas loosely in and around Israel. So, you go to the north, you have Lebanon and Turkey. Syria has serious hyperinflation, and just the countries in Iran has serious hyperinflation. And these happen to be the countries that are involved in the end time scenario.
So let me go. So we were talking about this. This kind of falls right into what Paul was talking about, because we've been talking that this dollar chart looks like it's going to get bottom in the 6th of January, which is 2 weeks from now, and then it starts climbing again. And a high dollar across the world causes problems, does it not? I mean, if you're Turkey and the U.S. dollar is running at 115, 120 on the DXY, that's a problem for you.
I think Turkey has this problem that cannot be solved anyway. I mean, I don't know what they're doing over there.
Well, but this is going to happen with Indonesia. Isn't most of the contracts around the world written in U.S. dollars? All right, let's go back, because I think that we wanted to really. This is one that's probably most important. I actually had one of my associates ask me if he wanted me to ask you if there's any possibility. Do you see a bounce coming up?
Well,
he
the
missed.
one that you had before, the overlays, I think is the most important one. So if there's no free choice, all markets behave the same way, especially because mass psychology is the same. And what you see over here is it was not updated that after the line below, the green one, if you compare to the blue one, a bounce had to come, right?
Oh,
And
right.
we
Right.
did see the bounce. And now if you look at the low, you see 90.23. So I wrote this morning, the indicators don't look like it, but for now there's 100% correlation. So we have to keep in mind, if this continues, then the beginning of 23 is going to be a big problem.
Because we had thought this was going to be looking, because we had talked about a month ago that you thought this was correlating to 1987, wasn't it?
No, I thought about the 1929 and 2008 have about the same correlation. So it doesn't matter which one you take. But if you look at this one, then you see the bounce that came. It's not updated. I did it on purpose. So the green one had to go up, follow the blue one. And that's why we had the bounce for the last couple of weeks. And now it's the beginning of 1923. If you see on the bottom right, the beginning. So now, we have to watch it. Things don't always continue like we think, but it's possible. So we have to be very careful over here.
See, and
Well,
this is where I would ask you, Charles, being a Jubilee or a Yovel, because I mean, if this is the year following a sabbatical set and it's a 50th year, like a reset, if you will, debt being released in the 50th year, like a super Shemitah. That's why I find this fascinating, this chart here.
And again, I forgot. I was paying attention. I forgot. And why is the 50 years so important?
Well, because this would set up a set going into a new set of 7, and that's the scenario, the tribulation scenario is a sabbatical set of 7, and this would be a hard reset that would kick that into place per se.
Well, and Paul, we're real close to a reset on this.
Exactly.
These countries in Europe are just, they were crazy enough and took all these bonds that were negative interest rates, and then interest rates rise. And what does that do to a bond portfolio? Charles and I have been talking about that for 2 or 3 years. That it just decimates the wealth. So if you have $10 billion and you lose 8 because the interest rates went up, well, that you're going to default. I mean, you just know that you're going to default. And you couple that with the U.S. dollar that's coming up, which makes repayment really, really hard for people. So that goes along with your scenario, I think, a little bit.
Yeah, and that's where where I've listened to a lot of your work in the past, Charles, and it's like you lay these scenarios out, and then I lay some of these things out, from a, like you say, a sabbatical set, Shemitah, and then ultimately, when is the Jubilee? The reset of the whole thing, where debt's relinquished and things are restored to their owner, and it's like, what do you do with because that if hypothetically, and I don't know, but say we are in a Jubilee year, that's going to run its course until the fall of 2023.
It could very well be.
Yeah, when that year would come to an end and be completed.
Yeah, but I just think there have so many bad things happened. So compared to that we've been through so many bad things, and if you're not sure that the first seal was already broken, it has to be much more terrible than we had before.
Agreed. Yeah, ultimately, when that takes place, you won't have to ask the question. It'll be so over the top.
So we have to bring this back as to what is someone going to do about it, because a lot of our listeners and a lot of people that we reach are not as sophisticated as Wall Street guys. So, Charles, you're telling them to at this juncture, do they still have time if they've got money in equities to get out? Would you say that they should get out? Or I know they probably missed the top, but
the equities that I would say, but not because I want to make money. We're doing extremely well. Just follow the research, because there are certain stocks that we do UNG, USO. What else? This the places to make money. I wrote that you probably didn't see the research of today yet, but I wrote that to my regret, we have to be more active in taking positions also next year, than we usually do in order to get the right rate of return.
Well, I've had discussions with people when we talk about this, and this is kind of a trading platform. You have to really listen to your points. So when you give a target and it hits that target, it's time to sell, is it not?
Yeah, then it's sell, but it's so much against here. I talked to Paul about free will, and we want to be in charge of our fate. That people find it hard to accept that there's such a thing that you can say the dollar goes to here and here, here, and then it's over. Because that changes your whole outlook on religion and creation and everything we talked about.
Well, but everything cycles. So let's just talk about the dollar. So you can see the dollar is starting to bottom. So if you want to make some money, you would have an entry point on the bottom of the dollar.
Yeah, but what happens is this. You look at the cycle. Oh, the cycle's interesting, Mr. Nenner. But let's see if he's right this time. So now the dollar bottoms and it's up 4 or 5%. Oh, I think he's right. And then let me buy some dollars. And then it goes down 2%, 3% intermediate. Oh, I'm going out. That's usually what happens. So I tell people always just do exactly what we say. When it looks worse, that's the easiest thing. Like Buffett says, when everybody's bearish, we buy. So when the cycle bottoms, you buy. And then they can watch these cycles for years and years and years. And you know what they say is, really, I'm not complaining, I'm just explaining. He says, well, it worked 10 out of 10 times. Maybe next time it's not going to work. And then I had, at that time, Mr. Gurewitz working for me, maybe you remember his name. Yeah. And he used to say to people, do you have anything better?
I remember David, yeah.
Anything better? Because there's no competition. It's not that if I say next week the dollar bottom, somebody else says in 3 weeks, let's see who's right. Nobody has an opinion.
Well, this is the QQQs. This is where
right.
I'm going to say most of this is a good representative of the NASDAQ. And, of course, NASDAQ's just been taking a terrible losses. It looks like it's going to be bottoming in February, which means it's got a long ways yet to go. So, people are going to be asking Charles if they should be getting out of here. Are they going to have an opportunity to save some capital, or are they just ride this out and try and catch by the next bounce?
I think they just ride it out, and but they will be so hurt that they're not going to take the low. That's usually how it goes.
So they're going to have to be conviction, because it looks like it bottoms in February 17th, and then it's going to get better.
Yeah, but I partly what I do is I don't show. I can do 40 years in advance. I don't do it because people then don't subscribe anymore. They already know for the next 40 years. So no, seriously. So that's why you don't get everything. You understand? It doesn't mean you're going to have a huge up move. I agree with Paul. Till the end of next year is going to be very troublesome. But the problem is that if they lose their shirt, they're not going to buy with the money they've left when the cycle bottoms.
Correct. So I keep getting, I've been speaking around town. We just did a forecast, and people were, you and I talked earlier in the year. We talked about what was coming in the stock market. No one seemed to really believe us. And, I think the QQQs are down, 20%, aren't they? 25%?
No, I think 35% already.
And so people are trying to say, well, what do I do now? Well, you missed you missed it. I guess how much more to bottom? Everyone asks me, look, if I drop 30%, is it going 60%? Is it going 70%? And
I think before the bear market is over, another 70% until the bear market is over.
Oh, goodness gracious! Well, okay, that's difficult. And here's now commodities. This is oats.
I want to tell you why I sent you this chart. Look at this cycle. And oats has to do with, you say, so with weather, with crops, whatever. But isn't this a great cycle?
Great cycle. Yeah.
So how can somebody says, I don't think I should follow cycles? That's why I bring this up to show you, listen, it happened, let me see, 1, 2, 3, 4, 5, 6, 7 times. How many times we're all dead by the time everybody has seen it 50 times? So I bring this in order to make my point that cycles really work. Now, as Paul says, you have freedom of choice to believe in it or not, but it's very profitable to believe in it unless you have something better.
So on this chart, it's showing us that oats, which is an agricultural product, is actually going to go down in price. Is that correct?
Right, but I only use this as an example how cycles work.
But it goes back into that. Why would oats be going and wheat not?
Well, it's I think yes, it's based on the New Testaments. Let's bring Paul in.
Oats are not mentioned. It's wheat and barley.
You see, you see.
That's probably why it's going down. All right, let me go. Let's see what the next one here is. And here's aluminum.
Now this we can explain. We can explain that the top in aluminum was right when the economy topped, and now the economy is going down because the cycles now are going down. So we can assume that this is one of the proofs we have a recession coming.
Well, we sure seem like we're heading into it, Charles. I mean, there's no. I don't need cycles to see that. I'll tell you, you can just feel it slowing down radically. The problem we have, of course, is getting good data as to what, and this goes back to what we've been talking about, what's true and what's not. So, and I love this. This is absolutely correct. So, looks like aluminum's heading down, which means probably no demand for it, huh?
I guess so. Yeah.
Well, listen. Let's end this up, and let me just thank you both for really a wonderful conversation. This was really fun.
I just think we should do it again.